Every business tells a story, and that story is written in numbers. In this lesson, we're going to learn one of the most important stories, how a business earns a profit or makes a loss. Your revenue is the amount a business earns from selling its goods or services, even if the customer pays at a later date. Expenses are the costs a business has to pay in order to run and operate. If the business earns more than it spends on its running costs, the difference is a profit. But if the running costs are higher than what the business earns, that difference becomes a loss. Here's a bakery that sold bread worth £1,000. That's their revenue. They spent £700 on flour, rent and wages. Those are expenses. So £1,000 minus £700 equals £300. That's their profit. Now look at this case. They earned only £600, but their expenses were £800. So £600 minus £800 gives us minus £200. That's a loss. They spent more than they earned. This is exactly what happens in every business, from a small cafe to a big company. Profit arises when revenue exceeds the costs required to run the business. When the cost is greater than the revenue generated, the business reports a loss. So remember, profit isn't just a lucky number. It tells you how well the business is being managed. One last thing, a business can make money from other small sources, like interest, rental income, profit from selling equipment. These are called other income, and they also increase profit.